Hey all, welcome to ShareTreck. This is Raj here, and friends, I hope you had a good day at the market. It was a contrast to yesterday's action. We saw Treasury yields jumping following the report showing that job growth was 303,000 in March as against an expected increase of 200,000. We also saw that wages rose 0.3% for the month and 4.1 from a year ago, both in line with estimates. On end, wage inflation is below overall inflation and may not add to overall inflation. So that inflation can be kind of discounted. There can be a positive, however, the series of data we have seen so far suggests a strong economy, and this may provide Fed with even more justification to delay rate cuts. However, in my theory, we should expect a lot of volatility in the coming months, coming couple of months until we get a rate cut or a series of economic data showing the economy cooling down. Here is why. Ideally, today I would have expected the markets to tank. Instead, we saw them go up. How much of that was options expiry? I don't know. However, I am thinking that yesterday we had the market spooked due to geopolitical tensions of the Israel war spreading further. Today could have been a bit of a recapture from yesterday's decline. We are also now coming closer to the transition point where good news for economy is good news for the market. So far, we have been rooting for bad economic news like increasing unemployment or decreasing wages, etc. And the rationale was that bad economic news would enable the Fed to cut rates to prevent a recession. And we are now getting used to the high rate regime. We have been with it for a longer period of time, and the prospect of not having a recession seems to be a good one. And remembering that this is an election year and no one wants to rock the boat, I think that will stay. Interest rates will stay longer for a while, and I will not be surprised if we start picking up towards the third week of April, as per the election year historical trends, when an incumbent president is also a candidate for a second term. That has happened in almost 83% of the cases. That still leaves 17%. So, however low that 17% odds are, there is still a possibility that we may slip into a bear market until the Fed is prompted to cut rates. Case in point is that US oil is at elevated levels, and any geopolitical conflict can push it up and unleash downstream inflation across the globe. Oil could also go up as demand improves when European economies start to recover and rate cuts happen in the Eurozone. So those things are quite possible. There's a generally inverse relationship between the stock market and bond yields. This means that when bond yields increase, the stock markets tend to drop, and vice versa. When bond yields go up, they offer a guaranteed return that's now more competitive with what investors might expect from stocks. This can lead some investors to move money out of stocks and into bonds. Higher interest rates can also make it more expensive for companies to borrow money. This can hurt their profits and future growth prospects, which can negatively impact stock prices. But this negative impact could happen predominantly on highly leveraged companies which have got more debt in their balance sheet as compared to cash-rich companies, which will find the opposite effect because the cash that they have can now fetch more returns. Put another way, bond yields are seen as a gauge of risk-free return. When bond yields drop, it generally indicates a lower risk environment. This can entice investors to move money out of bonds and into riskier assets like stocks, potentially boosting the stock market. A dip in shorter term, like 2-year yield, might not have a dramatic impact on the stock market. This is because shorter term bonds are less sensitive to interest rate changes compared to longer term bonds. A significant drop in longer term yields like 10-year bonds can have a more pronounced effect on the stock market. This is because a bigger change in the risk-free benchmark, which is a longer term bond, can lead to a more substantial shift in investor risk appetite and discount rates, potentially leading to a larger stock market rise. So that's the backdrop I want to set for you. Now we'll also look at the markets, and we'll also look at the bonds and see how the yields are progressing. So keep this at the back of your mind. Now let's go and check out the markets. Nasdaq futures are looking pretty good at this point of time, and they are up 1.16%. I'm recording at 4:24 p.m. on the 5th of April. So the futures seem to give a resounding vote of confidence. And also this chart pattern out here, the candle pattern out here, is slightly bullish. from a Japanese candlestick. I could call it like the formation of a bullish harami is being seeded right now. I don't know how it's going to shape up, but it doesn't look bearish to me. We have seen a good recovery from yesterday, and we are still constrained by the 9-day and the 20-day exponential moving average. The 20-day exponential is at 18,307.75, and right now we are at 18,286.50. So we are still under the spell of those two exponential moving averages, and they have not yet crossed each other, so that's a positive. So the death cross has not happened. We have seen a spike in the momentum here. That's also another positive. And we can see by the shade of this histogram out here that the MACD is moving towards the signal line. So that's also a positive. Now let us look at QQQ. So when we look at QQQ, I can see that it was up 1.18% today. And yesterday we had this diagonal line of resistance. We wanted to make sure that the downward trend is validated. So I can say that at this point of time, we have not validated the downward trend, because instead of getting pushed down by this diagonal line of resistance, we got above it. So now that has become a support. So validation has not happened. So we are still waiting for tomorrow, or sorry, on Monday, to see where we open. If we open below, again, I would like to look at it the day after to see that it hits this and then goes back down again. So as long as it doesn't hit this resistance in two subsequent instances, it would not have validated the downturn. And also we can see a pop in the momentum, and MACD is also moving towards the signal line. So these are all good signs. And VIX has started falling, and VIX has gone below the line of support at 16.05 and converted that into a resistance. So this is a good thing for us, and this will definitely help. And let us adjust this, because I think this should be a little below. So it has still not gone below the supports. The support should have been below there. I apologize for my mistake out here. Then we look at S&P 500. It's also showing recovery in both momentum as well as MACD is picking up. Now I'm very curious to see what the US oil is looking like. So US oil has been going up. It has marginally declined minus 0.16%, and the market is still open. So it continues to be on top of this line of support. I'm going to mark this green, and I think it's following a higher trajectory, which means that there will be there will be more pressure on the Federal Reserve to increase the interest, because inflation can come up. Oil price goes into all commodities that are transferred, all goods that are manufactured, because oil is used everywhere. So we want this to drop. If this doesn't drop, we have a problem. And if you look at the MACD, signal line is still moving away from the MACD, and also the momentum is overbought. It tried to moderate a little bit today. That's why you're seeing this red candle out here. We needed to moderate for a few sessions and potentially fall below this diagonal line of support. Only then I will see the potential of the Fed being more dovish. Now let's take a quick look at the bond yields. I got the US 2-year bond yields. They are going up here, and they are on a bull channel right now. If you draw a line from here, it's a bull channel, and I'm going to just mark this roughly green. And you also see the familiar consolidation out here. So if we consider this to be a bull channel, and then this could be a bullish pennant, so overall it seems bullish. And then we have the momentum also spiking up, so the yields are going up, and you can see that in the 5-year as well as the 10-year. So that's the effect of today's economic data. So I'm quite surprised that we got a bump today. We got the stocks going up, because generally when the yields go up, the stocks have got to go down. So I'm thinking that on Monday we may have a surprise, and the stocks could fall. Let us look at the post-market action. QQQ is still going up post-market, and if you look at futures, it's also going up. So let us figure out what's happening out here. Let's go on to the genomics section and have a look at the best performing stocks first. So Bionano Genomics, which has been bouncing along the bottom, rattling along the bottom, is up 3.40%, and it's no longer a penny stock, it's a dollar stock now. ALT has gained a little bit finally. I bought it around $10.20 or something like that. Since then it has dropped significantly. It's gone up a little today. I'll take that. Illumina was up 1.39%, and DNA was up 0.92%, going up all the way to the princely amount of 1.08 per share. We'll take that any day. And we still have support out here, which is at 1.07. So we are just above the support out there. I'm going to mark this green. Let us keep the chart updated. PSEB finally got a little bit of traction. It's up 0.60%. So it's not closely hugging this diagonal line of support. So that's a big relief. ARCG was up 0.15. Bluebird stayed flat during the day. And we have Prime, which was up 0.69%, showing a little bit of sign of life before touching 30% on the RSI. Intellia was down minus 0.76%, and our favorite CRISPR was down 3.32. It was the worst performing genomic stock in our watch list for the day, and it has finally fallen below the 200-day exponential moving average. So friends, this is going to be terrible for CRISPR Therapeutics. It's at 61.66. I wouldn't rule out the possibility that it may not be able to sustain 61.66 and fall down further. Momentum is also looking very weak, and we know that in the past it has fallen all the way to 26.25 on the RSI. That could happen this time, especially with the rising yields. The appetite for companies like CRISPR is going to be less. The positive aspect for CRISPR Therapeutics is that they've got plenty of cash in their balance sheet. So I think that's a mitigating factor. We look at Caribou, which was our second favorite. It's also doing very badly. Let's go and look at the AI sector, and let us sort out to have the winners on the top. FNGU was a winner today with a gain of 4.16%. And even now it is teasing us. It's not giving us a clear indication of where it's planning to go. Is it forming another bear channel, bull channel? Let me pull this out from here and put it out here. Is this what it is doing? Or maybe I can connect these points out here and create a new line. So I don't know what is happening out here. It is consolidating a lot. So this being a bull channel, if we are looking at a pennant out here, it has to break up on the outside, on the upper side. But right now I don't know what's happening with the FNGU. I'll leave it at that. I'm encouraged by the boost in its momentum, and also by the fact that the MACD is going towards the signal line. Now next I'm looking at Meta. Meta is doing very well. Yesterday I was speaking about Meta positively. It's still continuing to do well. Then we have Cloudflare, which also has recovered significantly since yesterday's dip. And it's gone above the 9-day exponential moving average, and also above the 20-day exponential moving average. So that's a very big positive. And we have a spike in the momentum, but MACD is still looking suspect. Amazon is another thing that I was very happy about, and it still continues to ride comfortably way above the bull channel that we have out here. It had a handsome gain of 2.82% today. MACD is looking healthy. Momentum is also looking pretty strong. AMD was up 2.77%. Finally, some sign of life from AMD. But I would say that that's because yesterday's fall was very, very steep. Most of the things that we see today, I think, is a combination of a dead cat bounce, where bottom fishers will come in and think that we have already reached the bottom, and also a combination of options expiry. In my opinion, both these things are working together, and Monday will give us an idea of what's going to happen. ASML was up 2.74%. The chart has still not improved. Momentum is looking good, but MACD is still suspect. Nvidia was up 2.45%. Finally, it got some sign of life, and instead of going below average on the momentum scale, it has jumped up. So this is a very positive sign. But the MACD still needs to work a lot to cross over the signal line and become bullish. So I will take this. I think Nvidia chart is on the mend, in my opinion. ARM was down 2.30%, and the chart is not looking that great, but momentum has shown some improvement. And then we have Applied Materials, which was up 2.19%. Again, still consolidating out here, breaking above the 9-day and the 20-day exponential moving average. And this basically puts it into a much better position and helps it to consolidate the bull channel setup that is there, which is the arrangement of the exponential moving average in the particular sequence with the longest moving average at the bottom and the shortest at the top. So it's looking good. Momentum is also looking very good. The MACD has to turn around. That's the only constraint that we have here. Palantir is up 2.14%, a decent jump, and it has gone above the 50-day exponential moving average, so that's a big relief, but it's still being pushed down by the 9-day and the 20-day exponential moving average. We should not forget that the first death cross has already been formed, so I would be very careful with Palantir. And let's go on to Microsoft. 1.83% gain today, and we have the MACD struggling to come closer to the signal line, but momentum jumped a little bit. That's a very nice jump in momentum. I would take that any day. And we have this line of resistance at 425.30, which has constrained the share for a good part of the day. But we ended the day at 425.52. So just above that. I'm not going to change this immediately, but I'll do this tomorrow. On Monday. Then we have Broadcom, which was up 1.60%, again being able to go over the 9-day and the 20-day exponential moving average, which is a good positive. MACD needs to improve, but momentum is already looking good. Google was up 1.32%, and it's crossed the 9-day exponential moving average, and it's firmly back onto the bull channel that it was on before, so I'm happy about that. And we'll see what happens tomorrow. Momentum is looking good. MACD is also looking good. Qualcomm was up 1.04%, and it has managed to go above the 9-day exponential moving average. In my books, that's a positive. MACD still needs some work, but momentum has improved. Oracle was up 0.57%. Chart is looking decent. I need the MACD also to cross over, but that's the place where Oracle shows weakness. Apple was up 0.45%. Very, very slim range of trading. A doji candle out there. And the momentum has picked up, but it's below average, but MACD is looking decent. The weakness is in the momentum, and we need improvement out there. Adobe was down 0.41, and the worst performer in the Mag 7 was Tesla, which was down 3.63% today, and it's well below all the exponential moving averages. Momentum is also below average. Chart is looking very weak. MACD is also going closer to the signal line, ready to cross over to the bear side, not looking great. We are looking at the fear and greed index, where we are improved from yesterday. We are in the greed area, which is I think a little bit of animal spirits. That's good. So these are the days when I question my own learning and my understanding of the correlationship between various elements of the market. We saw yields go up for the bonds, and I was expecting that the market should drop, but the market did not drop. So the only two explanation I have is that maybe the markets thought they overreacted yesterday to the geopolitical tensions and dropped too much, so a bit of recovery was in place. That's why we are seeing this happen. The other factor could be the options expiry is kind of making this distortion. So we'll see it on Monday. I think on Monday we should probably open negative. If that doesn't happen, then I'm back to the drawing board trying to learn everything all over again. Maybe there is something wrong in my understanding. And if you guys know what's happening, put that in the comment section. I think as fellow investors, we need to share all the information with each other. And also, members, please join me on the Zoom call on Sunday. And we're going to talk about everything. And also, we're going to educate each other and try to make sense of all these things that have happened this Friday. Well then, I'll catch up with you again in the next video. Bye for now.